This is the Captain Ngala, the market hacker. Today we are back with another video. We have been talking about the type of chart patterns, and we had talked about continuation chart patterns. We talked about reversal chart patterns and how to trade them. And today we want to talk about bilateral chart pattern, which is the last chart pattern we are going to talk about. Now, what is the bilateral chart patterns? That one is what we are going to look at today, and we will be done with the chart patterns. Then we move to candlestick formation. You can do one of the trade psychology. Alafu we do candlestick formation. For the people who are interested, you can comment down below there. Comment the topic you want us to handle, so that we can go together. Now, what is bilateral chart patterns? That's what we are going to talk about today. Bilateral chart patterns, in a simple way or a direct way, are patterns that indicate or signify or signal that the currency prices can move in either direction. Are chart patterns that signify that the price of a given pair in the market can move in either direction. Guys, it is as simple as this. It is just a chart pattern that signifies that the currency pair or price of a given pair within a market portfolio or within a market can move in any direction, or can move in any direction at a given particular time. Now, this shows that how do you trade this given market? It shows that this market, you have to wait for a certain period of time for you to trade this given market. But we are going to see. Let us move on. Now, as we have said, sorry, let me remove this. As we have said, these are chart patterns that signifies that a given pair in the market can move in either direction. That one is the meaning of bilateral chart pattern. And the bilateral chart pattern is this one. This is what we are discussing today. That one is the bilateral chart pattern. Now, what we want to do today, I want to show you how to identify bilateral chart patterns and how to trade them. Now, we have types of bilateral chart patterns, or we can say examples of bilateral chart patterns. We have the subcategories of bilateral chart patterns, and number one, we have what we call ascending triangle, which we'll talk about. Triangle. Then we have another one is called descending triangle. Descending triangle. Then we have another one called symmetrical triangle. Symmetrical triangle. Sorry guys. We have symmetrical triangle. I don't know whether this is the right symmetrical. Then we'll move to what we call the last one, We have ascending, descending, triangle. I think we'll talk about this. We have ascending, descending, and symmetrical. These are the ones we're going to talk about, and these are the example of the types of bilateral chart patterns. We have ascending triangle. Let me remove this. We have ascending triangle, descending triangle, and symmetrical triangle. These are what we are going to talk about today. And without wasting time, we are just going to start with ascending triangle. We are going to talk about ascending triangle. When you talk about ascending triangle, it is the opposite of descending triangle. Now we are going to move very fast for this video not to be very, very long and boring. Now let us start immediately. Let us remove this for us to have good space. We are going to draw. And you know very well the way drawing is hard, guys. It's not easy. Yes. We are going to start with the ascending. Ascending, let me say, some people call it a flag. This is, let me say the market has been moving this way. Then, let us draw it. Then when the market reach here, this market moved this way. This is the place. And then you find that from here, this market has been moving this way. It means this market has been forming some formations in this market, some formations, as you can see. Now this is what we call ascending triangle. I hope you can see it very, very well. Ascending triangle. Now, for the meaning of giving, what we are talking about is the ascending triangle, guys. The ascending triangle. The energy is lower, but I know you can get it. Now, there are two things. This is how to trade, because we are not going to learn about very many theories. Because you know very well I always don't love theory. I love going direct to the point, and we start with immediate effect. Now there are two rules how to trade this given market. Number one, you can trade within that channel, within the channel, or trading within that channel is called scalping. Scalping. You can scalp between that channel, or wait for breakout to take a long trade, breakout to take a long position in that given market. Now you have two options here. Whether it is either you scalp within this channel, or you wait for a breakout of this structure and you take a long position of that given structure. Sorry. Now we are not going to waste time. For you to trade within the given to scalp in this structure, I know you understand very well. You wait for this structure to touch the trend line, and you buy at the demand zone. You buy at the demand zone and you sell at the supply zone. Demand zone is always the support, as you know very well. Now somebody can come here. You can trade this market by waiting for the market to hit this line. Then you sell, or you wait for the market to hit this trend line as you buy. Those are two options, and it is very simple, though the profits are very minimal because of the distance being traded. Another characteristic of a given triangle, ascending triangle, in the upper trend line, it is always on a straight line. As you can see, the upper trend line, which is at the resistance, is always in a straight line, and this one is the one moving on ascending direction. That is the ascending triangle, ascending direction. That is the ascending triangle. Guys, that is the ascending triangle. That one is a characteristic of ascending triangle. Then, how do you trade this? I've shown you how to scalp between these, which is very easy, as you can see. And how do you trade? How do you trade? How do you wait for the breakout? And I have told you very well, for you to wait for breakout, kindly check the movement of this structure. And when the structure is broken, let me show you something. Let me say this structure is broken from here. You don't enter this trade, because I know very many people will enter this trade at this given point, at this breakout. You don't enter this trade at this given breakout, but you wait for the retest of the trend line or the structure. Then you take a long position. Let me remove this. After the structure has been retested, you wait for a long you wait for a long position. You enter a long position up to the next support or the previous support. Let me say the previous support was there, was here. You take a long position up to the previous support, but some people will take it this way. There's another way which is very safe. You measure the distance from here. You measure the distance from this breakout, from this consolidation. Let me say this is, I'm sorry, just want to measure the distance from here, but you can even approximate. You want to measure how many pips are these. Sorry. You want to measure. This one is 159 pips. Let me say you come here. This is 159 pips. Then you come here. From this place, you know very well that that one is 159 pips. You measure again. Where is 159 pips from the entry? You come here at the entry. From here up to here is 159 pips. Let me draw it because kind of I'm confusing some people. Let me say from here up to here, it is 159 pips. Now you come from here at the entry. Your entry will be here after this retest. You come from here up to here. That one is 159 pips. This is the guaranteed take profit. Your stop loss should be 50 pips above that trend line, or 20 pips depending on the capital you have. Now we are going to name them very well, because some people like This is where the entry. You wait for the structure to be broken. This is the entry. Wait for the structure to be broken and retested. You enter. Take profit. Your guaranteed take profit is 159 pips, 158 pips. Your entry is, your take profit is here at 158 pips. Let me name it again. At 158 pips, that one is your take profit. Then your stop loss will be somewhere here, which is 20 pips or 50 pips. Now this trade is 1:2 because you are risking 50 pips to make 158 pips. Very good trade, which means every $1 you risk in the market, your return is $2. That one is a very good trade, which you can take, which is very reasonable. Some people will come here and because this one is a guaranteed take profit, they will take their profit from the distance of entry up to the trend line, and you measure from your entry up to your take profit. That one is the ascending. This is the ascending triangle. Well, let me say this is the ascending triangle. That one, when the market breaks below. Now, let us look at the scenario where you find that the market breaks above. The market breaks above because the market can either break below or break above. Remember, I told you that bilateral, it is whereby the market it signifies that the market can move in either way, which means the market can break to the lower side or the market can break to the upper side. That one is the descending the ascending bilateral chart pattern. Let me say there is a breakout and a retest of the same. What we did from here is what you also come and do at the top. Let me say the market was broken here. Your entry should be after the retest, or some people will even take the entry from here. Me, I always wait for this neckline. I call it a neckline to be broken, then I enter. Then your take profit should be a distance from here up to here. You come and measure at your entry. This is where you will take your profit. Stop loss, some 20 to 50 pips, and you are good to go. Very simple as that. Guaranteed 98% a trade strategy. That one is you can never be compromised. Now let us move to the descending triangle. Descending triangle. Let us draw it. Let me say your market was moving this way. Then the market was moving that way. Let me say there was a trend from there. And this one must be, that one must be on a straight trend line or on a straight line. That one is one of the characteristics. I hope you understand. It should be from here. Now let me say this market was moving this way. This is some good trade you can find in your yours. Let me say this market was moving this way. This market was moving this way. Let me say this market has been moving this way. I've told you that you can decide to trade within the channel. You can decide to trade within the channel. This one should be here. I'm sorry guys, because we had said that this trend line, let me this trend line should be on a straight line. Let us draw it again. Let me say it is something like this. Then you have your trend line from here. It has been descending. You have your trend line from there. Yes. Now this market has been moving this way. As you can see, it has been moving this way. Now someone can decide to trade this market within this given channel. You have two options: either to trade that market within that given channel where it is forming high low, low high. You can enter a buy at the support and sell at the supply or the resistance. Now this is how you can trade within the given channel. But we also said that the best time to trade this market is when to look for breakout. And I have told you that breakout, you wait for this structure to be broken, which is good, and you wait for retest. Then you take a long trade. You take a long trade, and the guaranteed take profit, as I told you, it is the distance from here. You measure the distance from here up to here. Then you come here, measure your entry up to the same distance. That one is the guaranteed take profit. That one is the guaranteed take profit. Your stop loss should be some 50 pips below the trend line, and that one is how to trade a upward breakout, which is the bullish breakout. We can also trade the bearish breakout. Let me say let us move this. Let us trade the bearish breakout. I'm sorry guys, this video is going to be very long, which I didn't expect, but because this topic is very, very interesting and it is magical, it can make you lots of money. Let me say there is a breakout, you wait for retest, then you enter a long position up to the previous support. I mean, when it is a bearish breakout. Now what do? Measure this distance from here up to here. Then at your entry, that one should be your take profit. Stop loss. Sorry guys. Stop loss should be some. Sorry, what is happening? Stop loss should be some 50 pips or 20 above this. That one is very easy, and we are done with the descending and ascending. Then the last one, we have what we call symmetrical. Symmetrical, one of the characteristic, it is like a moving in a pipe kind of, and there is no trend line, which is the market is moving at a straight line. Let us draw it and you see it. let me say we have something like this. uh, Sorry, let us say we have something like that and something like this. Now this is the symmetrical, something you can still the same way I explained that is the same way this one is also will be done. You can trade within, or you wait for breakout either on the top long position, wait for breakout to the downward, wait for a breakout, the downward side, retest, long position. The reason why I always tell you to wait for a retest in the market to avoid fake breakout, so that the market cannot reverse against you. You avoid fake breakout. Profit measure from here up to here. Come measure from your entry, which is the neckline, up to this place. Come here, entry, take profit, stop loss. You know how to put. It is very simple as that. For us to avoid this video to be long, guys, thank you. That one was my time. If you want us to discuss a given topic, kindly comment down below. Kindly like this video, share and comment for us to move to the next level. Thank you, guys. That one was my time.